You want to know what made me $100 million in 1929? It wasn't some fancy indicator. It wasn't insider information. And it sure as hell wasn't because I was glued to the ticker tape, making 100 trades a day. It was doing absolutely nothing. I'm Jesse Livermore, and I'm about to tell you something that's going to piss off every broker, every trading guru selling you their course, and every finance bro screaming about the next big trade. The secret to making real money in the markets? It's learning when to sit on your hands and do nothing. And trust me, that's way harder than it sounds. Especially in today's world where you've got notifications pinging you every 5 seconds about GameStop, Dogecoin, or whatever the hell everyone's pumping on social media this week. Stay with me for the next 30 minutes because I'm going to share the exact philosophy that took me from bankruptcy to being one of the richest men in America. Multiple times. And the best part? You don't need a fancy education, unlimited capital, or even particularly good timing. You just need to master the one thing most traders never will: patience. Let me start with something that might sting a little. You're probably losing money in the markets right now. Not because you're stupid. Not because you don't understand charts or fundamentals. You're losing money because you can't sit still. I learned this the hard way. Multiple times, actually, and each lesson cost me a fortune. Here's what nobody tells you about trading. The stock market, crypto, forex, whatever you're playing with, it's not designed to reward action. It's designed to reward patience. But everything in your brain, everything in this instant gratification world we live in now, is screaming at you to do something. Anything. You see a stock moving, jump in. You see red in your portfolio? Sell immediately. You see everyone talking about the next Tesla? FOMO kicks in like a freight train. I get it. I've been there. Hell, I invented being there. But here's the thing. The market doesn't care about your feelings. It doesn't care that you're bored. It doesn't care that your buddy just made 20% on some random altcoin. The market moves on its own time. And if you don't learn to move with it, you're going to get destroyed. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." And you know what? He's right. I should know. I was on both sides of that equation more times than I care to admit. Let me tell you about the first time I really understood this lesson. And by understood, I mean I lost everything and had to learn it the hard way because I was too stubborn to listen. It was early in my career. I'd made some good money in the bucket shops, reading the tape, making quick trades. I was young, cocky, and thought I had the market figured out. Sound familiar? My name is Frank Deutsch. I had a winning position, a really good one, the kind that should have made me serious money if I'd just done one simple thing. Sat tight, but I didn't. Every little wiggle in the price action made me nervous. Every small pullback felt like the beginning of a reversal. I'd take profits too early, jump back in, get shaken out again. I was trading my emotions, not the market. And the worst part? After I'd closed my position and locked in my mediocre gains, I watched that stock continue to run exactly the way I'd originally predicted. If I'd just held on, if I'd just been patient, I would have made 10 times what I actually pocketed. That profit I missed, it didn't go to someone smarter than me. It went to someone more patient than me. Here's another one that really stung. The cotton market. I'd done my research, analyzed the fundamentals, and I knew cotton was going to make a big move. I was positioned perfectly, and then I proceeded to screw it up by trading in and out, trying to catch every little swing. By the time the big move finally came, I was on the sidelines, having exhausted myself and my capital on meaningless noise. The trend I'd predicted happened exactly as I thought. I just wasn't in the position anymore because I couldn't wait for it. You know what I learned? Being right about the direction is only half the battle, maybe not even half. The real skill, the thing that separates the millionaires from the broke traders, is having the patience to let your thesis play out. I remember sitting there watching other traders make the fortune I should have made and thinking, I knew that was going to happen. Yeah, well, knowing and profiting are two very different things. After enough of these expensive lessons, I finally figured something out. Something so simple it sounds stupid when you say it out loud. The big money isn't made in the buying or the selling. The big money is made in the waiting. I developed what I called my sitting tight philosophy, and it became the foundation of every fortune I ever made. Here's the core principle. After analyzing the market and getting positioned, the hardest and most important thing you can do is nothing. Just sit there, let the market do its thing. Now I can already hear what you're thinking. But Jesse, what about stop losses? What about managing risk? What about all those times the market reverses? Hold on, I'm not talking about being stupid. I'm not telling you to buy something and then ignore it like a gambler at a roulette table. Patience doesn't mean being passive. It means being disciplined. There's a massive difference. See, most traders confuse activity with progress. They think the more they trade, the more money they'll make. But that's backwards. Every time you trade, you're paying commissions, you're paying spreads, you're paying taxes. More importantly, you're making decisions based on incomplete information and emotional impulses. The market needs time to develop. Trends need time to mature. Your thesis needs time to prove itself right or wrong. I had a rule. If I couldn't justify a trade with cold, hard logic, I didn't take it. And if I had a position that was working, I didn't mess with it unless my original thesis had changed. Think about it like this. If you plant a seed, you don't dig it up every day to check if it's growing. You water it, you give it sunlight, and you wait. Trading's the same way. You do your analysis, you get positioned, and then you let time do its work. The hardest part isn't finding good trades. It's having the balls to hold them when everything in your brain is screaming at you to do something, anything, to feel like you're in control. You're not in control. The market is. And the sooner you accept that, the sooner you can start making real money. Let me tell you about the greatest example of patience in my entire career. The trade that made me a legend. The 1929 short. By 1929, I'd been watching the market for months. Everything was overheated. Everyone and their grandmother was in stocks. Shoeshine boys were giving stock tips. Sound familiar? Just replace shoeshine boys with your Uber driver talking about crypto, or your cousin who just discovered Wall Street bets. I knew a crash was coming. I could feel it in my bones. But here's the thing. I didn't just wake up one day and decide to short the entire market. I waited, and waited, and waited some more. Why? Because timing matters. Being early is the same as being wrong. I'd learned that lesson the hard way, multiple times. I waited for what I called the pivotal point. That moment when the market tips from bullish to bearish, when the trend actually breaks. Not when I think it might break, not when it feels like it should break, when it actually breaks. And then, even after I started building my short position, I had to have the patience to hold through the rallies. And there were rallies. Every time the market bounced, everyone said the worst was over. The newspapers called it a buying opportunity. Other traders covered their shorts. Not me. My analysis hadn't changed. The fundamentals were still garbage. The market was still overvalued. So I sat tight. Do you know how hard that was? Holding a massive short position while watching the market rally against you, even temporarily? It's psychologically torture. Every fiber of your being wants to cover, lock in some profit, reduce your position. But I'd learned my lesson from cotton, from all those early trades where I got shaken out right before the big move. This time, I was going to be patient. This time, I was going to let my analysis play out. And when October came and the market finally crashed, when Black Tuesday hit and everyone was panicking, I was sitting there with one of the largest short positions in history. That patience, that ability to sit tight through the noise and the doubt, made me approximately $100 million. $100 million in 1929 money. That's like multiple billions today. And you know what the crazy part is? The trade itself was simple. Short and overvalued market. The hard part, the part that made me rich while others went broke, was having the patience to wait for the right moment, and then the discipline to hold through the pain. Now let me break down what I mean by pivotal points, because this is crucial to understanding how patience actually works in trading. A pivotal point is the moment when the market's character changes. It's when an uptrend becomes a downtrend, or vice versa. It's when accumulation turns to distribution. It's when the smart money starts moving and the dumb money is still celebrating. But here's the key. You can't predict exactly when these points will happen. You can only recognize them as they're occurring or immediately after, and that requires patience. Most traders try to predict the future. They want to call the exact top or the exact bottom. They want to be heroes. But that's not how you make money. You make money by waiting for the market to show its hand, and then acting decisively. I never tried to buy at the bottom or sell at the top. Never. That's a fool's game. Instead, I waited for confirmation that the trend had changed, and then I got positioned. Think about it in today's context. How many traders tried to short GameStop at $50 because it had to come down, and then at 100, and then at 200? They were right about the direction, eventually, but they got destroyed trying to predict the exact top. The patient trader waits for the frenzy to peak, waits for the first signs of distribution, waits for confirmation, and then acts. Is it as exciting? No. Do you get to brag about calling the exact top? No. But you know what you do get? To keep your money and make more of it. Here's a practical example from my own trading. I'd identify a stock that looked promising. Maybe the fundamentals were strong, maybe the technical setup was clean, but I wouldn't just buy it immediately. I'd watch it. I'd wait for it to prove itself. I'd wait for it to break through resistance. I'd wait for volume to confirm the move. I'd wait for other smart traders to start accumulating. And only then, once I had multiple confirmations that this was a real move and not just noise, would I establish my position. Was I sometimes late to the party? Sure. Did I miss the first 10 or 20% of some moves? Absolutely. But you know what I didn't do? I didn't lose money on false starts. I didn't get chopped up in consolidations. I didn't blow up my account chasing every possible opportunity. Patience isn't about catching every move. It's about catching the right moves and making sure they count. Let's talk about why this is so damn hard. Because intellectually, everyone understands that patience is important. But emotionally, that's where traders fall apart. Your brain is wired for action. For thousands of years, immediate action meant survival. See a threat? React now. See an opportunity? Grab it immediately. Hesitation meant death. But the market isn't a saber-toothed tiger. It's not going anywhere. And that caveman brain of yours is working against you. Then you add in today's environment, you've got social media bombarding you with everyone else's winners. You've got notification after notification about market moves. You've got influencers and gurus telling you that you're missing out if you're not trading constantly. It's FOMO on steroids. Here's what I learned about the psychology of patience. First, boredom is not your enemy. If you're bored in your trading, that's often a good sign. It means you're not overtrading. It means you're waiting for your setups. It means you're being disciplined. The most dangerous state for a trader isn't fear or greed, it's boredom. Because boredom makes you take trades you shouldn't take just to feel like you're doing something. Second, you need to reframe how you think about doing nothing. In any other job, doing nothing gets you fired. But in trading, doing nothing is often the most profitable action you can take. You need to train yourself to see patience as an active skill, not passive waiting. Third, you need to separate your ego from your trading. Every time you make a trade, you're putting your ego on the line. You want to be right. You want to feel smart. You want to prove to yourself and others that you know what you're doing, but the market doesn't care about your ego. And often the most profitable thing you can do is absolutely nothing, which gives your ego nothing to feed on. I struggled with this for years. I'd see other traders making moves, and I'd feel like I was missing out if I wasn't also active, like I was being lazy or not trying hard enough. It took multiple bankruptcies for me to realize that patience wasn't weakness, it was strength. It was the ultimate form of discipline. And here's something else nobody tells you. Patience compounds. The more patient you become, the easier it gets. You start to see patterns in your own behavior. You recognize when you're about to make an emotional trade. You develop the muscle memory of sitting tight. It's like meditation. The first time you try it, sitting still for 5 minutes feels impossible. But with practice, you can sit for an hour and it feels natural. Trading's the same way. The first time you try to hold a winning position through a pullback, it feels like torture. But after you do it successfully a few times, it becomes part of your process. All right, let's get tactical. Here are the specific rules I developed to force myself to be more patient. You can adapt these to your own trading, whether you're dealing with stocks, crypto, forex, whatever. Rule number 1, never take a trade out of boredom. If you can't articulate a clear thesis for why you're entering a position, don't enter it. Write it down if you have to. If your reason is because it's moving, or because I haven't traded in a while, that's not a thesis. That's an emotional impulse. Rule number 2, set a minimum holding period for yourself. I'm not saying hold losing trades forever, but if you enter a position, give it at least enough time for your thesis to play out. If your thesis is based on a weekly chart, don't panic sell based on a daily move. If you're swing trading, don't day trade yourself out of the position. Rule number 3, limit your trading frequency. I used to give myself a maximum number of trades per month, not because I wanted to miss opportunities, but because I knew that excess activity was my enemy. It forced me to be selective. It forced me to wait for the best setups, instead of taking every possible trade. Rule number 4, avoid looking at your positions constantly. I know this is harder now with smartphones and apps, but checking your portfolio every 5 minutes doesn't change anything except your stress level. Set alerts for key price levels if you must, but resist the urge to constantly monitor. Rule number 5, have a plan before you enter any trade and stick to it unless your original thesis changes. Not unless the price moves against you temporarily, not unless you get nervous, unless your actual analysis changes. This removes emotion from the equation and forces you to be objective. And here's the big one. Rule number 6, learn to love cash positions. Being in cash is a position. It's not being lazy or missing out. It's waiting for the right opportunity. Some of my most profitable years included long stretches where I did absolutely nothing. Look, I'm not going to lie to you. Mastering patience in trading is hard. Maybe the hardest thing you'll ever do in your trading career. It goes against every instinct, every impulse, every message this instant gratification world sends you. But it's also the difference between being consistently profitable and being another statistic. As Edwin Lefebvre wrote in Reminiscences of a Stock Operator, it never was my thinking that made the big money for me. It always was my sitting. That's the secret. That's what made me $100 million in 1929. That's what can change your trading career, if you let it. So the question is, can you sit tight? Can you wait for your moment? Can you resist the urge to constantly do something? Because if you can, you're already ahead of 99% of traders out there. Now, stop watching trading videos and go practice doing nothing. Trust me, it's harder than it looks.